So the model itself, to give you guys a bit of an overview, and we'll start at 10 a.m. because I think that's better. We're looking for deep retracements with trend. So I cannot stress enough, and this will be a major part of the video, that this does not overrule structure. It does not like just throw out the window of multi-time frame analysis. You guys will have a little bit of success using this model even without that while you're learning structure and multi-time frame analysis from a better level. But this kind of gives you an area, it gives you narrative, right? So we're trading basically into and away from these areas, and they're the market objectives what we're trading down to, right? So for example, in this chart, we're looking at the 15-minute time frame. The energy of the move came from this low, right? So we're here at 10 a.m. You'll find things like this where you've kind of got your area of interest now, right? We're looking at, it won't always line up with your last 15-minute zone. And you'll notice as well that there's some confluence here. You might draw, say, the midpoint from this zone to that low, which lines up. You got your midpoint here of the prior zone, and now you have your pocket inside. So the Wombo combo got its name because we're looking at these pockets that have confluence with other areas of interest, right? Rather than, say, a pocket of interest being here and you're looking at, say, the retracement down into it from this area here. This is maybe your prior zone, and you're getting wrecked as it blasts through this prior zone here, right? That doesn't make a lot of sense to me. What makes sense is looking at whereabouts price should be trading into, and now we're looking for a framework to go out of it. Right? And you'll also notice a few different things as we go into it, that you'll have retracements along the way on your lower time frames, which is facilitating the movement, say like something going like this, where we're trading back down into this area. You've now got, actually I'll leave that up for a sec. You've now got these retracements that are happening at pocket areas to then get short as we trade with an objective down into our higher time frame pocket here. And then staying out of trouble after that's achieved its objective, you've now got the same sort of thing. We're looking at, okay, we've traded in, we've now broken structure maybe, now we're looking for something similar. You've got your pocket trade that comes in, and maybe another one that comes in, and so on and so on and so forth, right? So the idea is not only to have an idea whereabouts the market's narrative and objective is going, which isn't always just midpoints of areas of interest. We're looking at things like SNDRs or prior zones that were just broken that are unmitigated, and these areas should line up with it. So it's not liquidity based, you know, we're not looking at something trading in, we've kind of got, okay, like this runs that runs that, maybe this runs that again, and looking for some sort of pattern in here, whatever. We're looking for areas of interest that line up all together. So we're stacking high probability confluences for a ridiculously high win rate system. And you'll find through your back testing that this is quite crazy, right? So if we drop down to the 1 minute on this back testing, we've got a few different things going on here, right? We've got our 10 a.m. low, which is kind of dropping in to our area of interest, right? Let's get rid of, what was that other pocket that I had that did make a lot? All right, this was the midpoint, wasn't it? So we're not looking at the midpoint necessarily here. Now, the important nuance that you guys are going to find in your video is that quite often with these 15-minute areas, there's a few different ways that it can happen. And you guys that have learned market structure from us, you guys kind of know that if you have, say, a 1 minute area of interest, it's possible that we trade in and then rocket ship out. It's also possible that we knife through and then we're kind of chopping around in here before we go. And you'll find that because we're using a 15-minute pocket here, that there's a multitude of things that can happen. Okay, so the model itself, we're not looking at just, okay, we're looking to go long out of here and away we go, right? I'm actually going to put the midpoint on this because I like to use the midpoint quite a bit. Visible, and we'll go not yellow. We'll go something fun. Where's yeah, let's go indigo. Let's go indigo, sure. And we'll go dot. And we'll save as default. Apply. Right? So you guys will find the midpoint is usually quite nice of an entry, and that pairs quite well with your narrative. But the important thing that I can stress is that you're not looking typically for just a blast out of 15-minute zones. Often they will trade through because the 15-minute candles will respect these areas and they'll close either inside or above when you're looking long, or vice versa when you're looking short, right? So it's not, okay, whatever this midpoint is, call it 18041, we're not just setting a limit order and away we go. We want to see a reaction from these areas. Whereas the lower time frame ones, you can be a little bit more aggressive as long as you haven't achieved your narrative, right? And then we'll get into sort of how to stay out of trouble and whatnot. That's also in the video. But for now, what we're looking at here is we're obviously short. We haven't achieved our objective yet. Should we bounce off of this, what are we looking at, right? Well, for starters, if we form a low here, we're expecting some form of inducement if we are going to leave here, right? I don't really consider this consolidation, the ability to do this, right? But if we had something like, say, like from this low, or it might even tap off here, and then you get some sort of movement away from it, we're pretty much expecting that to get taken, and then the larger move will happen. Or what's nice will be something like even more abrupt, where you kind of have this, and then you get your change in order flow, which then you'll often see this trades back into your 15-minute pocket, and then away we go. There's a million different things that can happen here, okay? Alternatively, what we've kind of got as well is, should we fail here, right? Or even if we tap into it and go up, you're likely looking at a retracement as well for wherever this low ends up being. So say this low ends up being from here, and you've got your retracement, say from like this area of interest. I'd actually draw it from where like the energy of the move came from. So this is where we differ sort of from those that have studied ICT in the past. We're not drawing it from the top of the swing to the bottom. We're drawing it from the energy of the move. So say this goes here at 64.25. This will be an area we're now looking for retracement into to get short, right? And you'll notice that this lines up with SNDR on the 1 minute time frame. That's very important. We're not just drawing these areas. The confluence and the combo comes in from stacking multiple areas of interest to then take trades from. Okay, so we'll use 20 points today, and we'll kind of see how we react to this level here, which looks like it's going to offer something quite nice here. And I'm using that just because of how this is moving into it. It looks quite violent. Okay, so we've got this. Let's actually put these levels visible too. Right, so we're watching for a reaction from this because it's a higher time frame zone. We don't need to be early. We need to be right. Starting to get a nice move away. If this closes above this, I'm not going long. I think that this will be a retracement. I'm looking for some sort of inducement to then get long underneath this low into our pocket. Right, so this looks like it's moving. Let's move that to there. This now ends up being our retracement level, right? But your one trade, while you guys are learning from this, if we end up trading up to here, you could argue there's going to be a lower time frame retracement, but I wouldn't take that one. I would wait for a deeper pullback. But we're waiting. The high probability trade is out of this pocket here, right? And then what you'll likely find is that after we get that, you'll likely find that the lower time frame will give something as well. So could you argue of taking a long in here? Yes. I think that waiting for this low to go would be probably a lot better. Consolidation of the 950 macro as well, trading into this, but just hasn't achieved our objective. Okay, so where are we at here? Speed this up a little bit. I'm still hoping for a drop down into this. Haven't quite got that yet, obviously. Right, we're expecting this low to mitigate this area. If we blast up, we might get a lower time frame reaction. Now, there's a few different ways here, and you guys will see us sort of. So if we're drawing from here, oops, and you've got your lower time frame one, you have inducement here, so I'm not going to take this long regardless of what happens. But you'll notice that if we're going to retrace up to here, we're going to fail on the lower time frames. And if that failure occurs, we're probably going above this high. As we build, maybe this will do something like this, where we get our strong push, which then leads to failure, and then down we go. That's a viable alternative. We'll see how this ends up here, if we even get into this. And this kind of stacks up. Again, you've got your fractal here that broke the SMDR to the left on your lower time frame. So I think this is a viable long if you get a major major failure in here. But again, I'm waiting for this low to be taken. And it looks like no bueno. Okay. Yeah. Yeah, you'll start looking at, okay, this area of interest is great. I'm expecting inside of here somewhere is going to be the pocket as you guys look at this a little bit more. And you'll find that you'll start to see objectives not being met because we haven't traded into areas, which is very possible. So it starts to be like a question of like, okay, well, why didn't we take this yet? We had to trade back down. In this case, it looks like the midpoint, so I wouldn't have been interested. This actually looks like it's going to be a higher time frame one, so I'm not very confident in this area here, but we'll see. Right? But while you guys are learning this regardless, you're essentially looking at the objective right now is trading higher. We're not 100% certain of whereabouts that's going to be. Right? We have our speculation of this area of interest, but we're essentially looking for other reasons to get short as we trade back down into this. So that started literally up here, wherever that ends up being, right? Or you're looking for the long out of it with your higher probability, and in which case you want to see some sort of inducement come in as well, right? Now, looking for retracements up, that's fair. Right? And you could argue as well with this, like, okay, we're drawing it maybe from there, but I'm going to stick with the low. Okay, and we'll take our first trade from this. And again, we're looking at immediately the 23.6, right? Aligning with our current trend. We've now got lower time frame structure. I think that we take this at some point, but right now it looks like we're achieving an objective of trading higher based off of our inability to trade lower in here. If we're going to take this inducement, I think that it would have happened pretty quick. Right? So the key with this trade is that we had our inducement prior to, we had our bull bar. We had our pocket area on our lower time frame. We're either going to be right immediately or wrong. But this is leading over a retracement, and now we're determining whereabouts our objective is. So if we pause, even if we got rid of this, and we're looking at, okay, let's go to the 5-minute or the 15-minute, that happens every time on NinjaTrader. I don't know why that does that. Right? You've got where your move really came from. Right? And you've got no, I'd probably still draw it from there. Right? Yeah, I'd say here. I'd say that pocket is fair. Okay, there's your 5-minute, and there's the 1-minute. Right? So if we drew our 5-minute zone, it does line up quite nicely with this. Right? So we'll actually leave that on there. Right? And what are we starting to get? We're starting to get a little bit of lethargic movement that comes in. We are expecting this to break, but initially, when you guys are looking at this model, there's a few different ways you're looking. You're looking for retracements with the current objective to lead to a higher time frame move, which we're expecting to be bearish in this case because our objective hasn't been met. Similarly, you could be looking short this entire way until we get to our objective, right? And the retracements that come up that line up with areas of energetic movement here. We won't go into too much advanced stuff of what we're looking at here for a movement back down or whatever else. We're just going to follow pretty much strict MTA with this model. But the liquidity portion of it is waiting for the inducement that comes in. And that's pretty much it. And you'll find in ranges this actually works quite nicely. Right? So right now, for example, we're looking at this low might be weak, yes, but it's weak only if you're starting to get these pockets that aren't being respected on the way down. Right? So for example, taking a trade here, you've now got your 23.6 that'll likely get hit at, what is that, 98. But again, our high probability trade is something underneath here. We're looking long up until this area, and then if we fail here, then we're basically done looking for longs. We're expecting that movement to then break that low. And that's because this pocket is trading into this pocket, which is then trading down into our higher time frame, which will continue on, right? Instead, we're getting a little bit of range-bound price action here, which is something else. And you'll find that the pockets will align on both time frames. On the 1-minute time frame, but you'll find that there's a short pocket in here that's leading probably back down. There's a lower time frame pocket that's leading up. We're not going to go into that today. That'll be in the future. But that's essentially what you're looking for ranges. But we can all agree that fighting the objective, I'm not looking for shorts in here. I don't care if this gives 10, 20, 30 points, whatever. I don't want to be trading against the current objective until we're ready to take this. And that would come likely from this area. Is this kind of making sense, or is this all over the place? Right. So again, it doesn't replace structure. Our structure right now, yes, higher time frame bearish, lower time frame is bullish. We're not fighting the lower time frame bullish trend until it breaks. Likewise, until we've achieved our objective, we're not looking for higher time frame longs. All right, we're looking still for retracements to get short. Move that out of the way a little bit. So if we zoom out, we still got, yeah, I mean, this area is quite beautiful, and now we've got our pocket inside, which gives us confluence. Right? And I think we've all been there, kind of, okay, you know, we're not quite done maybe on the short side yet, or maybe we're long, and then say the higher time frame move comes from here like we're expecting. Like we would have loved getting out of our longs in here and maybe flipping or whatever else we're looking for. This gives us like a real, this is your danger zone if you're long, right? And equivalently, we don't want to be fighting short in here with the understanding that the market should trade up into it. Right? So obviously, you know, holding on to these longs would have been beautiful, but we're looking at just taking our base hits as we trade against the higher time frame objective. And with practice, you guys will be able to take, say, that long there, which ends up taking this high, and you might sit through this. That might be your strategy. That's fine, right? But the model itself is, if you're taking lower time frame ones, you're taking your base hit, and then if you want to leave a runner, you can. But these trades that happen again and again and again, we're looking at just taking those, right? And again, you'll find that these lower time frame movements, these will follow this quite nicely, right? So we're drawing it from here. Why? Energy of the move started, right? 1 minute time frames to lower time frame. This is very aggressive. So just had to take that liquidity, looks like. Not quite up in the area we're expecting, so we're still expecting higher, despite seeing things like this, right? And you'll find these trades can be quite aggressive. Often they will liquidate, yes, but they end up respecting the area that goes on. So through your back testing, you're going to have to determine sort of whereabouts the liquidity is. For example, does this line up with anything? Yeah, it lines up for sure, right? This is the area of interest that drove price higher, but the liquidity is underneath this low. And that'll just increase your win rate, and you'll notice, lo and behold, if you're taking that trade to the 23.6, you're already out. You're not dealing with this, which I do expect it to trade above this high. But again, base hits 10, 20, 30 points, whatever the case may be, size accordingly, risk accordingly, and away you go, right? But the key is that you're not drawing it necessarily. I mean, obviously in this case, in hindsight, that would have worked a little bit better, right? Maybe even from down here, not quite. It's better to draw it from where the energy of the move was, and then align it with your liquidity. Right? So why fight the current objective despite what it looks like? Despite what it looks like. Now, there's a few different ways of entering. So as we approach our area of interest that we've been waiting for, we see things line up. You're looking for the liquidity. We've taken this one. We've got a pretty nice one above this high at 44.25, right? Whether we get there or not, right? So there's a few different ways of entering. We've got the aggressive model, which you might be partial with. But essentially what you're looking for here is a few different things. So there's a few different ways this can play out. We can barely tap into it and then just dump, similarly to what we look at for prior swings. You might get some sort of a change in order flow, in which case, say we dump into here, we break the low that puts it in, we trade back in, then leave. Lovely. Right? You might get something like this, where it trades into it and actually goes nowhere and then liquidates it, then leaves. There's a few different ways this can play out. Right? This being like aligned with our higher time frame objective, we're likely going to have a violent move from here. Right? So based off of that, if there's a trade, what's our midpoint here, 40, 50? Then I'll be looking for an aggressive trade through here based off of lethargic movement into here. Expecting a higher time frame move to finish our objective. If I'm right, then I'm right immediately. If I'm wrong, then I take a small stop, but I'm pretty confident with this area of interest. Could you draw from the last energy 1037, this one? Or are you talking like 1031, 1035, 6? You're looking from this one to the high? Are you talking about like getting involved in this pullback down? I suppose that's fair. What I'm mainly looking at is like these sort of retracements back in, I suppose, are valid. Like if you're looking at that, then that trades back into your pocket. This is the lower time frame one. You'll find that that the probability with these, as long as you're on your trend, you're waiting essentially for the move to happen. So there's two different ways, and you'll find based off of your personality, you can trade either one. You have your initial aggressive trade into the area of interest. So in this example again, you've got your sort of low here, your high. You're either taking it in this area when you see a reaction. So you might be involved after the liquidity sweep happens and then you're taking a trade. And often you'll be involved even here or whatnot, and then you want to see it respected there. Fine. That's the aggressive model, right? It's still bearish, but you're expecting the narrative to be finished here. Whereas we've now had our pullback. We now have a body closure where above our last structural bear bar in this move. Now we're looking for a tap back in. This barely touched off of the pocket, I believe, right? So if we draw a pocket from there to there, 95.50, right? 95.50 was the low of that candle. So getting involved anywhere in here on the confirmation is fine. You'll often find, depending on the manipulation leg down, if say you have like a beautiful breaker and then some sort of imbalance or something, you'll find the imbalance will be a tap into, and that won't align with the confirmation trade in the pocket. It won't get there. And you'll find that out through your back testing as well. Just what you're looking for in the movement back down, if it's going to actually trade into it or not, right? And you guys might not even be looking for longs in here, right? You guys might allow this to happen, or you're only waiting for the higher probability one that comes out of this zone, or you're looking for the short because you're looking at this going, well, I'm only looking short because our higher time frame is still short, right? But you'll often find that this movement, if it's done its objective down here, will just blast through. And this is how to stay out of trouble with those. So we're looking at this that our objective's not done. We're looking at this lethargic movement as inducement. We're expecting violent movement out of here. I'm actually going to slow this down so we can see the sort of order flow that comes into this. And then we'll see how this goes. Right? And you'll notice as well, these typically line up with time frames too. Right? Some people suggest that price doesn't, or time doesn't really matter, but you'll find that these things kind of all line up at the same time, right? So this is 10:45 is your new candle. We're actually looking to see where this goes. We tap up into it. Did we get our midpoint, or did we get our reaction? Get up in there. If it comes through, I'm probably going to take an aggressive trade out of this. And if I'm wrong, then I'm wrong. Right? Again, 20-point stop for me. Usually my drawdown ends up being 7 to 10. Right? But if we're right, this is going to be a higher time frame move, and you likely won't get your change in order flow. If you do, you'll likely find that if we tap into this imbalance and then have like some sort of failure here, that might be something you're looking at. But this should just either drop pretty quick. Right, I'm pretty happy with that. So stop immediately goes there. I'm going to run this down for our objective, right? But again, if you're looking at this, your 23.6 is here at 88. So if I was in 2, and we'll see if there's an adding opportunity, you'll notice that it actually failed underneath this candle. So position not ideal. We'll see how this goes. If this trades through here and we get some weakness on here, I'll add. One of them will go off at the 23.6. We'll see if this ends up being inducement or not. Right? But you'll notice as well that even if we're wrong, we've got this area to trade back down into. Even if we're wrong. Okay, so there's our adding opportunity. Cool. We'll leave this. What's that low there? 57.75. And I'll take one off when we get to the 23.6 here. Right? And the reason we're being so aggressive in here is because we've got our lethargic movement. Our structure is that we're expecting a higher time frame bearish movement because we haven't finalized our objective here yet. Right? So we're able to be more aggressive because we're expecting, if there's going to be a higher time frame move based off of our multi-time frame analysis, that it's going to go very, very quickly. Because we've got a bunch to clear out. We're at the time that we like. We've now got a body closure underneath that. We'll see what ends up happening here. And what you'll likely find as well is that these won't give a retracement on the higher time frame. Depends where you draw it from. Depends where you draw it from. Often you'll see in higher time frames, yes. But the key with this is that we're not drawing it from, like, this is being drawn from here. Which is important because if we were drawing it from the low to the high of the swing, that's where it is, and we wouldn't have gotten involved. Assuming that this trade works out, of course. Right, which it looks like it's going to. We're starting to like fail really to try and go higher. This is more akin to higher time frame price action for me, right? But you'll notice I don't like drawing it from the high and the low. I like drawing it from where the actual move is occurring from. Right? And you guys might miss this, and that's cool. And again, you're looking for a long out of this. And as you get more adept with it, you'll notice that you're able to take longs to shorts to longs to shorts to whatever. Now, whereabouts are we expecting a bounce from? This doesn't take away all of our price action analysis where you've got your midpoint of your prior swing at 102, right? We could blast through, but we have structure in here. So while it's a possibility, you're expecting some sort of a movement back, maybe back up to here, which would be a lovely adding opportunity. And then taking that low, maybe trading back in, taking a low, right? As we move lethargically down. We'll see. Very rarely will you get a 79. Very rarely. Very rarely. My personal back testing of about, I think I'm at 168 trades as of last night. The average drawdown for me is about 7.5 points. But that has to do with what liquidity is being taken. Like ideally I wanted it here, but we're aggressively moving in. That looks like a clean manipulation leg. Right? And you'll notice as well, say we were wrong. I don't think we are based off of how this is delivering. But see how this is working. We're still going to trade into this. The location of our area is important. We're not shorting here at 28, right, on the way up, because we haven't achieved our objective yet. We're not waiting for a trade up in the 50s or something like that, and then missing it, having to chase here, and then dealing with this. Although you probably would have made money shorting the close of this candle. Not something I would have done personally. But you'll notice even when we're wrong on the trend itself, say it wanted to go higher, the location and the narrative, at least short term, we'll be able to make quite a bit of money out of this. These wee explosive momentum green candles going for a V. Yeah, I mean, how do I know that we're looking for a higher time frame movement? That's the weather conditions that I'm expecting this trade to be in. Right? Looks great in hindsight, but how do we know whether to be aggressive here or to wait for some inducement based off the pocket being part of the M5 or M15 camp? Right? Because we've got our lethargic movement into here, which is going to lead to a rejection, and we have our objective lower. So I'm painting a picture that I can be aggressive on an aggressive trigger, and if I'm wrong, but I'm still going to hop in even if that stops me out here and respects this area of interest. We're about to hit our first target filled. Don't rally away from me, come on. Am I going to be a dick for a tick? I think I will. I think I will, just because I'm still expecting this low. Right? But I mean, obviously, even if you're trading micros and you're up 35 points, you know, grow your accounts. Grow your accounts. Cannot stress this enough. Right? And understand how price is delivering here. For example, you had an inside bullish candle here inside the prior zone. People would have been looking for longs here. And I bet you this lines up with the pocket of this. Right? They probably still made a scalp out of that. There's one off. Right? And you'll hit little speed bumps on this, but we can all agree that the structure in the multi-time frame analysis, all these bullish movements here, even if they're inside of pockets of this, our objective is lower. And I can pretty much bet you that Mikey would have been waiting for this and not dealing with all of this. It might not be as clean on Monday or Tuesday or whatever day ends up coming this week. It'll happen every single day, multiple times, guarantee it. Right? We were very fortunate last week with a lot of algorithmic price delivery because of all-time highs. But we can all agree, like, if you're able to take one extremely high probability setup and it's able to make 25, 30 points every day, even if you just take one with high probability, that's crazy, right? And we're foregoing, at least while we gain profitability, we're foregoing all of the, maybe we're short and, you know, are we going to make 10 points on this or not before we get our faces melted off? Or maybe we're long in here, you know, do we get stopped? Do we take profit? What are we doing? Now we have narrative of where we're trading up to, where we're trading down to, where we're trading up to, what we're doing. Like we expect, if we get a reaction out of this, if we get a desired reaction out of this, this goes above this high. Right? This goes above this high. Now, let's pause this for a second because this is important. We have a higher time frame delivery here. Right? And you can argue that if we get, say we get a reaction out of the only place in here that's going to really give us a reaction from. So we can draw it from here because this was a bullish candle on this failure. This was a bear bar, and then we had a bullish leg here. We'd probably draw it from where the energy of the move came from on the retracement. That's very important, right? So you might draw it from here, okay. If we get a major respect of this area, right? We're right inside of this pocket here, fair enough. If we would have got a major respecting of this area, and by that I mean this candle sweeps down and you know, we get like a change in structure or whatnot, then we're heading back up and it's not ready yet, right? And if it's going to retrace back up, like I'm not married to this short, in other words. This is my target. I think it will take this low, right? But I'm not going to run away from the desk, because what might happen is we've now changed order flow here. We're now trading back down. What if we traded back up to the pocket of this move here? I don't think we'll take this high, period. But I also don't want to sit through unnecessary drawdown if that's going to be the case. So we'll see if we change structure. If we change structure at all, then we have a different decision to make. Right? Personally, this looks like it's going to run these lows. We don't even have to have this consideration. I'm just using it as in this is violent, which means that if we fail to break this low, at least right now, you could have a violent movement back up to this prior zone. Right? We're starting to get some acceleration here. Ideally, we get an SNDR or something that breaks that low, and away we go. Does that make sense to everybody? Right? And again, you can probably trail, like, for example, I wouldn't really want I really wouldn't want this high to break. I think that if we trade back up, we'd probably get held up in this if we're going to. I'm not going to be aggressive taking profit off because I want this this low to be taken. Right? But we have no swings in here. So we should be aggressively trailing, right? So, for example, I would have been above this high, then I would have been above this high, then I would have been above this high, and now I'm above here. Get going. 15 more points. We do have an imbalance here, but I agree 100%, which is basically what I'm doing. I'm protecting us from, maybe I'm wrong about the timing of this, and it's not going to do it. You know, I don't want to be married and sitting here in awe of a 50-point short. Right? We're right back down in the origin of the move, which we know is an extremely powerful area of interest. Right? In fact, if we get a valid swing out of this, if we don't build an SNDR here, then I'm probably out and I'll wait to reload. because that's how I would expect us to take this low. But this would be the area that that we're going to get a powerful shove from, if we're going to. Now that high was 78.25. That high was closed at 78, so still no valid high, but we're coming in hot. We'll see what we end up getting here. Right, not really conducive to an SNDR, at least so far. And again, I cannot stress enough that this model, while extremely powerful with how we're drawing it and the nuances aligned with it, you're going to find the video later, does not take the place of structure. Okay, so that's a good response from that. Good. I want to see this flush down, or I'm considering taking it out here. There we go. Let's go. Let's go. Right, now I do have it above an area which would be considered a liquidity pocket, yes, but I'm looking at this. If this is a manipulation leg and we trade above it, then I don't want to be short anyways. And you could argue, well, we've given back 10 or 15 points and fine, but essentially what you're doing is you're saying, am I willing to risk the probability of us taking this low versus, like, am I willing to risk that 10, 15 points for the probability of taking this low? And I think that would have been valid. Right, so here comes some important information. We're getting some inside candles here. I don't want manipulation lower that can't fail. I want this to be gone. Like, this isn't the SNDR that I want to create it at. Get going. Yeah, not liking this at all. Not liking this at all. Still a little early and aggressive to take it off, but certainly not not seeing what I want, right? We're seeing failure underneath bullish candles, whereas we didn't really have that at all. It's a bit of a change in personality. In live conditions, would I have closed it? I think it's valid trading back up into this and then expecting lower. I'm just not liking the candlestick failures that's going on here. Right? So what I expect right now, we might trade above this candle. Hopefully that doesn't stop us out. But we'll see what this happens. Right? Like, in retrospect, especially when you guys are starting to pick this up, you're taking it to this 23.6 area, which was at 87.75, and you're flat. And if it runs it, great. Or if you're leaving a runner, then you're leaving a runner, and maybe your stops above the last structural high, wherever that ends up being. You know, you might leave it above here, you might leave it break even, whatever. Like, I do think this will hit. Whatever happens in here does not change that narrative. Right? We're starting to fail. We just failed above that. It barely kept us in. I want to see double top and death. If I don't get that, well, just stop us out anyways. Now, again, our objective is not hit yet. Our objective is not hit yet. So whereabouts are we looking for a retracement? Whereabouts are we looking for a retracement? We're looking from where the energy of the move started from, which was the high in this case. Right? If we had this bull bar being the end, say we did it from here, we would probably draw it from that area. Right? In this case, I'm going to draw it from the low, oops, from the high to the low. I actually want this in snap mode. And this is where ICT gets it correct. Do we have an area of interest? Do we have an area of interest? We had a prior zone here. We had an SNDR inside of it that then broke this protected low. Right? So can we be aggressive right now? Probably. We have liquidity above this high. Is that feasible? I suppose. If we get an aggressive model out of here, this would be where the sweep model would come in. I would probably take that short. Why? Our objective hasn't been hit yet. I'm looking for shorts. There's no structure in this. I'm looking for shorts. So you have three different things here by the look of it. We have an SNDR. We have our retracement at the 65.9 in between of our pocket, right? And you likely have the prior zone here, midpoint, all within your pocket. So we've stacked one high probability trade, the midpoint of a prior zone, with a second high probability trade from an SNDR responsible for something. And now you've got a pocket inside of it that randomly lines up. What are the odds? So just for hypothetical sake, in here, and you're blindly trading it. We're in from, say, what, 1325. 1325. Right? See if it still tags us in. And we're going 10 points to 10 points. And you're aggressively trading this. And you're either wrong and it trades up higher, or you're right immediately and away you go. Right? Now, you could argue the 23.6, yes, but that's more of like a swing. If you're scalping and you're not waiting for whatever, then that's a little bit different.
Target filled.
Target filled. Pretty quick. Inside of your area of interest. Right? Now, this trades down the 23.6. You look silly, but you're taking your money and you're running from high probability areas of interest. Now, look at this. Look at this. Now, where the advanced nuance comes in, that you guys are going to have a premium video on, is when you're expecting this high to get taken. So who expects this high to get taken based off of this right now? 115. Swept this one already by a tick inside of our area of interest and the SNDR. Not me. No. Because of the violent movement, right? Anybody else? Or an if? Like, for example, if we bounced off of here, would you change your mind? If we liquidated this, obviously, we would expect this to be good. We've made a valid swing in here. Love it. You would need to fail prior to taking this low. Okay. Okay. So, one of the biggest things of trading is that you need, and we've talked about this a lot on live this week, you need to be very aware of what when you're short and very aware of what when you're long. The other side, right? So the only area you would consider whereabouts you're wrong in this is from the high to where? Where is the energy of the move? It's right here. So there's your pocket that we're looking at. We're expecting this. This will get taken. This will get taken. Right? We're looking through the market from a crazy lens right now. Oops. Oops. I'll draw that back up again. Right? So we've got this. I don't expect this high to get taken. Right? So this is your area of interest for people that are looking long. What happens if this area gets respected here? We trade back up at minimum to the 23.6. Right? Well, you've also got what? You've got your first push. Created a little bit of an SNDR here that broke above this area of interest. We might trade back into this. I wouldn't take this long, absolutely. Right? For me, it doesn't have much confluence. I would need to have it inside of here. But let's see what this ends up. I'll draw that retracement back up as well. You'd think with the amount of times that I've drawn these that I would know. You'll notice I didn't draw it from this low. You could argue, I suppose, in hindsight, maybe it hit that. No, well, did maybe ticked off. 98, 98. Yeah, it did tick off. You're right. Right? And so they're already out. We had quite the strong push. We're now expecting this high to go at 115. We'll drop this down. Right? Little bit of an SNDR here. Love it. There goes that high. Is this area still valid for a short? Right? Our narrative hasn't changed. We're still expecting this. What we're doing is we're looking at what the objective is and areas of danger to get aligned with it. For example, we wouldn't have wanted this movement here to have a body closure above this from the prior swing. Then our short would have been in jeopardy. Now we have inducement. That's right. So there's a few different ways of getting involved now that we have inducement. And by the way, A+ setups on this model all have inducement. A+. You will find these aggressive trades have a very specific nuance with it, with higher time frame direction and how fast you're expecting it to go. But guess what? These higher time frame moves, you'll often get your intermediate time frame movement and then your lower time frame movement that happens afterwards, which then hits the objective. Go back through your charts of this week. I think we talked about it a lot on stream 2. You'll find the move happens and then you'll get a retracement back into the zone that gives you your confirmation trade. We use that often with your 1 minute chart, and we'll probably see one here because we're starting to get inducement. If we fail in here and move away, then what we'll do with this one is if we get a retracement back into the area of interest, right? We've got our SNDR now, broke this high, love it, cool. Maybe we break this low, and then we get a tap back in and go. That would be lovely, right? We'll see how this ends up playing out, right? Again, aggressive model, we're probably already involved, right? And type 1 in the chat if you would already be involved in this short with that inducement there, knowing that we're going lower, especially with your higher time frame, right? And that's cool, right? So, like, say hypothetically again, we're short, we got 10 points. We're either happy with our inducement, we're looking like we're failing, or we're wrong. Now again, these trades, right? Like while you guys are learning, you might only consider taking the long out of here. That's going to be your high probability trade. But you'll find this is how the retracements work. This is the retracement of the retracements. This is the retracement of the continuations. There's the possibilities of this model happen 5 to 10 times on a day on how many different time frames. You will not want to trade anything else. Period. Right? But again, it does not replace structure. But you are looking for confluence of higher time frame zone or higher probability zones. Right? I'm only taking 10 points on these. Again, you could argue like you got your 23.6 and this is an adding opportunity or however you want to look at it. Right? So now we're kind of getting held up a little bit in here. Fair enough. I do expect this low to go. You might consider passing on a retracement if we get it here. If this candle continues bullish, who knows? But I would definitely look for this low at 92. Let's see what we got. Right? And again, this is sort of your lower time frame retracement here. For everybody who's looking long for whatever stupid reason, you know, will they make money? Probably, right? But this isn't respecting this, is it? In fact, a tap back in hasn't quite taken that low yet. Right? So because it's not respecting this, I don't expect it to take the high. Even if it does retrace. Maybe it comes into this imbalance here, maybe it does whatever. I'm not expecting it to take the high. It might. You got equal highs here. Right? But if we were to look at a movement of a retracement, you've got this here. You've got 109. So, again, if you guys are learning, you might consider doing this. Personally, I think it's far better and more conducive to your trading education and strategies to look for reactions in areas to determine whether they're holding or not, rather than blindly longing or shorting out of this. Yeah, these all in reality should be trading to the 23.6 or lower. And it looks like I might get wrecked on this one of the retracement because, you know, we didn't take this low. This is definitely not A+ by any means. Definitely not A+ by any means. Right? In fact, I would actually look at this high probably getting taken. I'm just showcasing these areas of interest. Yeah. This is probably, well, this isn't probably, this is not a trade I would have taken live. I'm just looking at sort of retracements and how they work for you guys. Right? And it looks like it's going to work out, but that's not what we want to be doing really, right? We don't want to be taking trades based off of outcome. We want to be taking it based off of, you know, logical decisions that we continue making. This is actually one of the main reasons I don't take limit order longs or shorts. Whether this works out or not, this is exactly why I don't like drawdown. I don't like drawdown. Right? And again, like failing big time, like we should probably adjust this. Yeah, but I mean, this could have taken this high. We can look in hindsight and say, great, you know, we only had 5 or 6 points or whatever the heck that is. But in reality, it's what do we expect to happen? This low or this high, I failed to make a new low. We should take it with equal highs. This is actually a low probability move here that we just made money on. Right? which tells us that we're probably going underneath this, and then we're probably going to blast down here. Right? I'll take the money, sure, but those are trades you get wrecked on in live markets. And I'd actually argue that the only reason we're making money on any of this in here, or at least that one, is because we're in line with the higher time frame and the objective. Even when we're doing stupid stuff like shorting in the middle of a candle like that. Right? So again, like you might wait for... Well, this is actually really good to talk about because we discussed this at length yesterday. So when do we get short if we miss this? When is our adding opportunity? We wait. Similarly to the long we took here, we allow price to tell us what it's going to do. If it takes this high and fails, then we can get involved as long as this area is still respected. Or what's our other opportunity? Low probability of getting involved, but high probability of trading. What if this high does snap? Oops. What if this high does snap here and trades back down to this? Now you have a high that's generated, it's broken everything in here, and now you have a retracement of that area of interest, wherever the energy of the move came from. We'll see if we get something like that, right? Again, I am expecting these lows to go. This objective this entire morning hasn't changed. Retracing higher to go lower, retracing lower to then go higher, based off of, again, we haven't really even looked at this, but we are bullish. We're just in retrace mode. We haven't taken this pocket yet. We've been waiting all morning. Waiting all morning. Is this making sense to you guys? Is this exciting? What's going on? Okay, so change in order flow, cool. You'll likely get a little retracement of this area here. Not really what I'm looking for. Yes, I would. That's exactly what I would. Right from that low that couldn't take this, and a lethargic movement. This is all inducement. All of it. And it will be a higher time frame double bottom inside of probably an SNDR to the left. Look at that. First tap, bang, break structure. Boom. Now you're looking for your higher time frame double bottom, which is going to be a rocket ship. Yikes. So again, we're not drawing this retracement if we get a trade out of this at all. Whereabouts are we looking for this from? Say this is the low, and we'll adjust it if need be. We're drawing it from where the energy of the move was. Where the energy of the move was, which is this high. Not here. Not here. Drawing it from the energy of the move. Right? And if we go below, great, even better, we've taken this low. See what we got. Does this area line up with something? Is that manipulation? Probably. I'm going to leave it on this one for a result of that. This lines up with our SMDR that just broke. Until we achieve our objective. If this area does not get respected, then we don't take it. Fine. Right? Right into the midpoint. Aggressive trade? Yes. Can you wait for confirmation? Yes. Will we get a change in order flow? Possibly. I'm not going to take this, but let's see how it plays out. Right? We'll see how this plays out. Right? Very likely that this could just unload from here now. Let's see what this ends up happening. Right? But again, power of the midpoint from areas of movement, not the manipulation. Not the manipulation. And then it's when to stay out of trouble. Right? You could have held from here and added in here whatever your guys' personality traits are. Right? 1, 2, maybe even 3, whatever. Maybe you're adding in on inducement. Maybe you're missing it and then adding in here something. And there's your 23.6, 84. And again, high probability to here and then flat. Grand total of what? 12 minutes, 13 minutes? For 30 points in this case? Right? See if we get inducement in this or if it's just tapping back into this area of interest. Again, our objective. Our objective. And what this does as well is it keeps us from looking for confirmation longs out of this, because that was beautiful. You know, how many of you guys this week have taken trades in here only to be stopped out here? Right? And again, this is important. We have an objective lower, so we're not looking at taking retracement of this in here and then getting wrecked. This low's job is to retrace to what our intermediate time frame is doing after it's respected the inter time frame zone here. So this movement, higher time frame, we're looking for retracement of this movement here, not this movement here that failed to do anything. Does that make sense? It's very important. Otherwise, you'll start drawing things like this and then getting stopped out, and you're going, well, where am I wrong? Very important. So here we go. Looks like we're going to get it. How violent are we expecting it? You'll also notice this is an intermediate time frame low. We could buy from the midpoint here. We could buy from the midpoint. But I don't want to be wrong and having it, we'll slow it down to 2x. I don't want to be wrong and have this blast down to here and then the 15-minute closes here. That's very important. Sometimes it will tap in. We've now taken this low of day. Great. Everybody who's aggressive is buying right here. Why? They think that this low is just going to get swept barely and then we go on a rocket ship. Is that possible? Yes. Usually that happens when this is already tapped into part of this movement. We don't need to be early. We know this is the area of interest. with a high probability, this is the area of interest that we're going to get a rocket ship from. So I'm not longing here. Right? I'm not longing here. What you're looking for is you're looking for a reaction from price that fails to go lower. If it goes from here, it's going to be a banger. Yes, it is. Exactly. Exactly the mentality. Even this. You could argue going long here with a stop below that. Fine. If that's your model and you're willing to get in again, if you're wrong, fine. We want to see a body closure above this high. You want to see failure of price to go lower. And I'm going to size up for this one. And if I get wrecked, then I get wrecked. But I want to make sure that I'm in properly on this. Okay, so we got our body closure here. Now we want to see failure of price to go lower. What does that look like? It might look like lower time frame structure, in which case you need to be a little nervous, but you want to see higher time frame shove out of this. And if you get a higher time frame shove out of this, you're not going to get a retracement back down into this. You're just not. It's going to be gone. Because this is objective done, higher time frame, double bottom in the area we want, and we're gone. So we'll see if we can find an entry here. I'm not looking too much to ape in. We'll see if we get strong pushes up and if we're failing to go lower here. All right, that was a pretty good attempt that only touched the body of this candle that broke the high and closed above it. This is looking really, really promising. I think a trade back down into this with a stop below here would probably do it. Okay. And we'll see if we're right. Immediately, again, where's our 23.6 of this? Let's get rid of all of this stuff. And hopefully we don't get wrecked here. But we'll monitor as well. So our 23.6 is all the way up here. What do you think? Too aggressive? Again, we want to see failure. If that fails underneath this candle, even better. If we get a body closure down here, you're in a little bit of trouble. We want to make sure that we're in properly. And there's going to be many different ways of getting involved in this. Right? There's no one size fits all with 15-minute zones. You want to make sure the bodies close inside of it. That's very important. If you get a 15-minute body closure outside of it, you're in a lot of trouble. Right? So this is chopping around. We don't really have a confirmation trade yet. You have lower time frame structure. We're expecting a blast off. If we don't get it, then we might have to mitigate here. Right? You'll notice I'm not putting my stop to break even just yet. I'm probably going to lift it underneath this low now. We're starting to get a little bit of lift off. You have this area that it might have to mitigate. This area that it might have to mitigate. Ideally, we build an SNDR and then go on a rocket ship. That would be perfect. That gives us lower time frame structure, facilitating higher time frame order flow. Right? And you might argue, okay, you know, you've got your sweep underneath, we're looking for failure or whatever, but in a midpoint of a prior zone, and that's fair, but we're stacking confluences. And not only that, we're shorting into it and taking longs on the way out of it. We're getting all the moves inside of this movement based off of our multi-time frame analysis, which I don't really see. I don't see nearly enough discussion outside of on FinTwit about multi-time frame. People love to talk about it. I don't see much education on it. So this is very, very good in terms of candlesticks. We're seeing attempts to sell off and the inability to do so, which tells us we're on the higher time frame direction. It also tells me that we're not getting a trade back into here. So we can start aggressively moving our stops up probably. Right? And you might argue, well, why trade here? And fair enough, you might go long on this, you might go long, maybe you're in aggressively down here, whatever. What we're looking at is the inability for price to go lower. The inability for price to trade lower, right? If we're on a higher time frame move, we're tapping into the open of these candles. And what are we doing? Are we failing above? No, we're not. We're closing with full bodies above. We're trading back in. Are we able to generate anything? No, we're not. In fact, this here trying to sell off that then closed on its high. That's very important in this narrative. And away we go. Right? And you're noticing this inability for bearish candles to form despite major effort is yielding higher time frame movement. A sweep on the 5-second chart. Maybe. You probably take this high. What is that high? 90? What we got? 89, 90, 90, 50. There goes your sweep. Right? And I think that's fair. You know? And you'll notice a couple of things here too. I think this is important. I think it was important. Because why did I not draw a retracement from this area here that had a massive manipulation like? Right? We hit the objective. Very good. So I'm not looking at the retracement here despite the possibility of this trading up to, say, the midpoint of this SMDR and then trading back in. Right? Is that a viable possibility? Yeah, I'd say that's a viable possibility. But our objective is done. Our objective is done. Right? So now you've got an area of interest, probably. Maybe we've tapped into our midpoint here. Or not our midpoint, sorry. You're looking at maybe from this intermediate high, if we drew it off of, oops. If you drew it off of the, come on, 5 minute. Does that line up with something? Yes, it does. Right? So if we went to our 5-minute chart or our 15-minute chart, I'm not sure if one of them. Look at that. You guys are geniuses with that second tab. Right? So we're drawing it from here. You could argue from here. You know, we're kind of blasting a little bit. You could argue from there. I'm going to leave it at this high that that formed the SNDR. Yeah, but it took away the lines, at least other than this. Right? So what's the importance of this 5-minute pocket? Similar to what we're looking at with this. Right? If we're going to get held up, we need to know whereabouts we're expecting price to react from. We've now taken some liquidity. We're at the midpoint here. Maybe we blast through it and trade up into this. Maybe we don't. Right? We're looking for reactions of price. So if we're going to trade up to this, maybe we trade back down into here. Maybe we get a deeper retracement. Maybe we actually just go sideways and then continue our rocket ship. Price can do a whole multitude of things, which is why we need to be aware when we're in positions of the other side. I'm not married to this long position despite how high we are or how much up we are. Right? So we could take 2 off here, half of our position, expecting a reaction from this. We might just hold expecting that we don't want to be given back anything of this position. This is exactly what we want to see. Right? But throwing away our analysis of this, the same reason that we're moving out of here, as much as we want price to just go on a rocket ship right to our target, we have to take into account how price moves, how structure is formed. It's very viable that we get a closure underneath this candle and form a swing, which then breaks. It's equally viable, and probably higher probability given the higher time frame move, that we cannot close underneath this, and we don't form a valid high at all. But if there was an area of price reaction, this would be it. I'm going to personally hold this, but we're going to look and see. I mean, case in point, what just happened on this candle. You know, now again, this is only like 5-10 points being dropped, but we don't want to give back unnecessary profit. We're looking right. We're obviously up on our trade. We want to stay right, which means that we need to see the market attempt to do something bearish and then fail to do so. That allows us to continue to stay right. Doesn't it? So there's some inducement. Okay. This is range bound type behavior at minimum, which means that we're likely going underneath this low, 76.75. And this is where many people that are looking for confirmations, maybe their EMAs are catching up or whatever, however other people trade, right? They're not going to be in down here, and that's fine. But they still make money on their trades. How? Why? I mean, A, do we care? Not necessarily, but we need to at least look into higher time frame participants that are covering their positions and buying. Speed this ahead a little bit. All right. Still didn't take this low. This is good higher time frame direction, but that failure, you've got to ask why we're failing above, especially if we fail to do so again. My guess is that we'll be going underneath this. There it goes. And what do we get? Are we nervous? You always find out the swing traders based off of this moment here. If you're comfortable holding versus if you're mitigating your risk. This is the area. Could you draw the pocket from the bottom? If we were going to trade into, we'd probably be drawing it from here, but I don't expect it to trade back down to there. To the 236 of the smaller Wombo, who would have guessed? Yeah, no kidding. Right, so what Mikey's saying is, well, there's probably a couple of things here. Number one, you're looking at, if we're going to fail this move, where else are we going to fail from? You're drawing it basically from here. Right? Lo and behold, energy of the move, retracement back in. Lower time frame area we want to hold. Boom. Does that align with anything? Yeah, it aligns underneath this. This is a bit more of an advanced nuance. Right? We'll get into this sort of stuff later on. But this is why we draw it from the energy of the move rather than just lows that don't really have much to do with anything. And I kind of drew that wrong there too, drawing it from this. You'd probably draw it from the actual high, not the manipulation itself. What I do like drawing it from is usually bear candles, but we don't really have any of those in here. Right? So we're chopping around in here as we build consolidation. Inability to make valid highs. I have no problem holding on to this position for a little while. No problem at all. Right? And that's despite if we fail here or not. And you could argue, okay, maybe I want to take it off here above this high. And I think that's fair. Right? But a lot of that will depend on if you want to pivot depending on how this reacts from this. Our expectation based off of structure, not Wombo combo, but based off of structure, if we build an SNDR here to break this protected high, we expect to leave, trade back into it. We likely go on a bit of a rocket ship, and then you're looking for your lower time frame movement in here. If this stays. Yeah, I agree. If we get a body closure, probably like down here. I agree. Right. How I look at this is I look at this. Right. I'm kind of expecting consolidation of the 5 minute, so I'm not really looking at what the 1 minute's doing. We're probably going to fail underneath this at 76, 75, that low. So we'll see how this ends up playing out. Obviously, we're sitting pretty, but we don't want to be giving anything back. Now, you'll also notice a couple of different things, right? So there's two ways this can play out. We either get a movement like this, in which case we get a violent movement back down, probably into this area. That happens. Or you get some sort of higher time frame shove. It trades above these that we tap back in violently and then we'll go. Right? And that's just what that ends up being is your multi-time frame where you've got your 15-minute your 15-minute candle wherever that low ends up being, which is just a nightmare. Lovely. One day I'll figure out NinjaTrader. I literally only use the dome on my Apex accounts. What you're looking at though is you've got this low that's swept. On your lower time frame, yes, facilitating your movements. But should the higher time frame trade up and then we violently move down, this low could actually be liquidated and that still doesn't break structure. Right? Because what will end up happening is your 15-minute chart will look like this. Like your trade up, trades down, trades up, right? Without this being a valid pullback, this is kind of just consolidation. And then the pullback actually comes liquidating that low, achieving the objective, and then we get our move. You see this quite often. In fact, that's a very high probability sweep trade. Clearing out the not part of structure, right? But we're focusing on the Wombo today, obviously. So still sitting in this. This is just going to grind, it looks like. Even on 4X, this is grindy. Body closure, you guys might consider like, okay, maybe we trade up and then you've got your midpoint of this zone, you know, your old structure trades or whatnot. Like our next area of interest could be something like this. Right? That we tap into and that's where the movement down comes from. Right? Shocker. Especially with this lethargic movement, we're expecting kind of a higher probability short to come back in to then mitigate maybe down here or maybe even take this low, whatever. Right? Does everybody kind of understand how price is moving to these areas of interest? That's what caps it, trades back down. But we're aligned with our intermediate to higher time frame wombos here, which then facilitate your lower time frame wombo that's kind of moving up, down, and sideways. Shocker. Shocker, shocker, shocker. And then again, you've got your lower time frame structure. This is your midpoint, your zone we just talked about. Midpoint of that might trade back up, facilitating a change in order flow, which then trades lower to the objective. Likely this low to clear out that intermediate time frame, not part of structure. If this low gets snapped and we get like a trade back into here, I'll probably take this position off for whatever that point ends up being. And then I'll look to re-enter that. Right? Getting your violent movement back in, characteristic of your intermediate time frame. Although it's probably only violent because I'm on 6x. But again, this is our sort of expectation. Certainly no panic. Certainly no panic. And we'll see if we have to close this out or not. And you'd be rightly looking at this going, well, we're in here, we expect this to have a reaction from it. Why are we not taking some off? And you probably should. Lethargic movement. We expect drawdown to come in, or at least a pullback. So it makes sense, right? But I am holding this based off of this area, and this is how I see market structure forming for it. And then it's up to you guys. If you're already out of your position, fair enough. Like, that would be what? 50 points. Like we want the 180 point move, 140 or whatever this is. And then you get to see through your back testing, you're seeing this and going, well, whereabouts are they just really wrong? And you'd probably argue right about now they start to panic. Right about now. Right about the same time that us a couple of years ago were looking short. Failure to make any sort of ground on that bearish candle, at least just yet. Even on 6x, you can see how this price is delivering. And now this is called what? Many of you know it as second distribution. This is your tap back in that then fails, and boom. Let's go. This is where the let's goes are at, hey? This is where the let's goes are at. Okay, so let's I'm going to take 2 off here. Not because I'm expecting anything other than maybe even a pullback into this.
Target filled.
But mainly because I want to zoom this ahead a little bit. So we'll put 1. Put 1 here. This high. My Ninja Trader sounds are a little messed up. It kind of says, like even when I have order canceled, it says target filled, I think. It plays weird sounds. I don't really know how I messed up with it. I was trying to take a bunch of the different stuff off because it was pinging at me all the time. So let's zoom this ahead a little bit, and then we'll get into a few questions that you guys have, I'm sure. And bear in mind, again, there is a video coming out, right? Mikey and Ty and I, we spent better part of yesterday hammering on it. Right? But you'll notice the best move of the day came from this, didn't it? It wasn't all the chopping in here and whatnot. It was taking the trade from the area with confirmation. There goes another one, and we'll see if this ends up playing out. Right? In fact, I'll probably just take this at 100 points. 48.50. I want to add a little bit more of a, we were working on a PDF this morning. So we took that structural high. We expect to trade back in now. We liquidated this SMDR. We'll see what ends up happening here. But we'll publish the video on YouTube. It'll be for all you guys. And then those that are in the Discord, it'll basically be like accelerating their ability to trade it properly and the advanced nuances that come in. But yes, it's already recorded, it's already done, and I just want to make it a little bit more friendly for people that are kind of looking at how we look at the market for the first time, rather than just like, well, obviously you're looking for longs here. Well, maybe it's not that obvious, right? Maybe we need to kind of be a little bit more beginner friendly about it. So, but in terms of what this looks like these days, I mean, this is exactly how we've been. This isn't something that we just developed kind of yesterday, right? It was how we put it into content yesterday. But we've been looking and trading this way for some time now. 100 points? Come on, give it to me. What time are we at here? 2 o'clock? We got time. We got time. We got time. Yeah. Yeah. Yeah, so there's there's actually a lot of free videos in our core content if you haven't checked it out already, where we kind of go into market structure 101. The multi-time frame of analysis videos quite good. The market structure one definitely is good. We're coming out with module 1 is pretty much done. Mikey is probably I'm going to give it to him to look at pretty soon, and see if we can add some stuff into it or whatnot. And that's basically, right from the ground up on market structure, and then narrative will kind of be your second module. And I want to have the course done by the end of the month, so it's going to be stuff sort of released on a weekly basis. But there's quite a bit of stuff that's in there. Right. In fact, I would even argue that you can probably be profitable just looking at some of the core content that we put out there. It might be like drinking from a fire hydrant. And a lot of that goes into sort of what you're looking at in terms of this model too, but it will give you a lot of the missing pieces. Boom. Right? And now, like, this is a higher time frame movement. Oh, we might get a trade back up into here, and now what are we looking at, right? You've got, this was your intermediate time frame area that we drew from here, but you'll notice as well we are bullish. Right? So if we look at our 15-minute chart and we kind of, okay, we're looking long here, but like, why do we think this tapped into there? For the same reason that we tapped into here initially, for the same reason that we tapped into here on a lower time frame. This is how the market moves. Right? This is how the market moves. right? From the energy of the move, which happens to be the high in this case, down to the low, not the manipulation. Who could have predicted this? I don't know what this candle's doing. Anyway. So lower time frame pockets to intermediate time frame pockets to higher time frame pockets, aligning with structure, building confluences of higher probability areas of interest. And then you'll get some prop firm interviews. Pretty much, right? Okay. Questions, comments. A lot of it, bear in mind, again, the video will come out and some of your questions might be answered in there. It's about a half an hour long. But what we got going on here? Or you guys just want to go back testing your own? Also, yeah, Mikey, anything you want to add, my friend? How many handles did we get? Lots. How many handles do we get? Why is that not showing in there? Not showing. Not showing. But I think we took a couple of 10 pointers in here. We grabbed 20 in there. This one was to the 23.6. That was what? 40. Probably 150. Not include, well, probably like 100. And then we took 100 points in here, scaling out. The entry at the bottom with the candle confirmation and not the actual zone retracement or sweep answered so many other times I couldn't figure out how people were getting in those bottoms. Yeah, so as much as I'd love to be able to be like, this is how the market moves. You're looking for A, B, and C, and it's going to look like this every single time. If only it was that easy as having inducement every time or not having inducement every time. What I'm looking for in these areas basically is the 1 minute you can be a little bit more aggressive, right? When you've seen this happen and now you're looking for the retracement back into it. So if we clear out all of this, first off, we have our objective, right? So the Wombo combo again is we're drawing it from where the energy of the move happened from. Sometimes that will be the high, sometimes it will not be. And you're drawing it to the area without manipulation. Now this closed here, so we can draw it from here. But if this candle wicked below this one, we would draw it from the low of this candle here. Right? So in this instance, you can be aggressive with these trades in as we were, because we're aligned with our area of interest, right? So if you get a sweep, cool. Right? And then this traded back down. We kind of got a little bit of a sweep that happened in here. We're also looking at the possibility that even if we bounce from here, there's a possibility that we're going to trade back up and fail, right? You'll see that if you get a change in order flow that doesn't occur here, right, which we didn't really, the low was here, and then we kind of just ran up. We didn't really have any wicks on the bottoms of any of these. Right? Which was one of the other reasons that I thought we would go above this high. So you got your inducement. This is probably your high probability trade. This is your scalp. This is your high probability trade. And now you're looking at it achieving an objective, which would have been this low. Again, if we don't get our change in order flow on your trade, even in your aggressive one, then you're in jeopardy, right? Because we need that change in order flow. And again, this ended up being low probability, and then you're looking for the retracement back in there for continuation, fair enough. But there's two key important parts of this. Number one is you're looking for your way to get in, which is essentially you're looking for some form of inducement on your A+ entry, right? So clearly a lot of selling that went on here. We then ran them out and failed above. We're looking for a trade in here, right? Whether that's at 115, whether that's at 113 or something. I wouldn't sell here, although you'll probably make money even doing that, just because there's no real point of adding on the risk in case we don't get a change in order flow and then it has to run these highs. Right? You want to be in, if you're aggressive, you want to be in with an aggressive entry. If you're conservative, you're waiting for price to tip its hand that it's done its movement up in this case, or movement down in this case, right? And then you're looking for the retracement of the move of energy. You'll notice as well that we didn't draw it from here to here, or sorry, from like here to here. We wouldn't have gotten trade or tap back in this case. Why? Because we're not drawing it from here. That's your intermediate one, which we're not expecting in this case. We're looking for lower time frame continuation because we just got our intermediate time frame move. From where? From the intermediate time frame Wombo combo. Now we're looking for a lower time frame Wombo combo, which aligns with the price direction of the energy of the move on your lower time frame. Right, which aligns with the SMDR responsible. Right, so there's the entry, but there's also when you're looking for lower time frame continuation versus intermediate time frame pullbacks. And that would have avoided anybody getting stopped out here on the short side because we wanted to wait for what? For the intermediate time frame price movement that's tipping its hand that we're going lower. Price movement comes in, multi-time frame analysis now. You've got 3 different confirmations. Your midpoint of your prior swing of this one, sorry, from this low to that high. Midpoint's there. SMDR there. And your pocket. Boom. Boom, boom, boom. Right? Mikey. With this one as well, like you'd probably draw it from like the energy of the move, which is probably came from here. And that would probably align with the pocket of where the retracement happened to. But I mean, like 61.8 to 0.7 usually aligns, like for example, the 61.8 on that area aligns with that fractal, the Wombo combo. There it is. Sweep and gone. Sweep and gone. But I don't need to. Zin's been destroying it for a while. I'm not going to spend any time saying anything to Zin. Yeah, exactly. And then the midpoint of the 61.8 and the 0.7 is probably where that low was. Yes. Yes, they will. And they're also going to be, like, we're going, like I said, this is going to be released to the public. This is really, like, I know we give a lot to the community and everything. It's a huge mission for us and everything like that, right? I think it's very, very important, that contribution. Growth and contribution, they're kind of the highest forms of the needs of the spirit. Right? There's 4 needs of the personalities. You guys know, I've talked about that before. The 2 needs of the spirit, that's where you really get your fulfillment from, and that's contribution, giving back to people, and then growth. I've had the privilege, working alongside Mikey especially this year, that I've had massive growth, both in my personal life, my relationships, my marriage, everything, and the contribution with this server was our way of really trying to give back to people. So a lot of it will be released on YouTube for them. In terms of you guys that have been here, especially from the ground up, before we've really, and we will become a massive trading authority in this space. Our way of looking at the trader holistically and sort of different innovations and whatnot that we do. There's a lot that we're going to give you guys alongside that video for the public that is going to be a lot more nuanced. You guys are going to have the multi-time frame analysis aspect where the public is going to be looking for this movement, and what they're looking for maybe a short back in. You guys are going to literally be able to be like, okay, like we're long, we're short, we're long, we're short, we're long, we're short, we're long, we're short, we're short, we're long, we're long, we're long, we're like bang, 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 bang. Right? That's the end goal. It's the end goal. Should you choose it? Right? Many of you guys will want only a 40-point banger out of this zone. And you walk away for the day with your $1,000 and however many accounts. Some of you guys might only take this at 10:45. That aligns with your work schedule and you want to spend the morning with family. That's cool. You're now looking for this high probability retracement. And you take 30 points to the 23.6. And you walk away and you take your wife or husband or significant other or whatever, and your kids or your grandmother out for tea, like whatever you guys want to do, and you're done. Everybody will digest this information differently and form something that works, whether you trade it aggressively or conservatively, whether you trade it for scalps, or whether you want that one high probability trade and you walk. However you want to do it is entirely up to you guys. We're just providing the framework and the instruction on A, how to get involved, B, how to stay out of trouble, which I think is very clear, right? And then we'll go from there. Yeah, that's very true. That's very true. Asia and London. London especially with its wild swings. Wild swings. 10:30. Any other questions from you guys? I'm jealous. Sorry, you asked a question, Sean. Does a close above 0.7 drastically increase the probability the pocket will fail? Where am I here? June? Why am I on this? That was probably when we were recording that yesterday. Does a close above 0.7? So, for example, if we're looking, so you're suggesting like if we close below here on the higher time frame? Or are you talking about like the lower time frame if we close like above here, or both? So, interesting question, and I love it. And I'll tell you a couple of different things about it. Number one is the 1 minute very well could have closed below here. What you're looking at is a body closure, and the video does go into this a little bit. You're looking for a body closure relative to the Wombo combo pocket that you're trading out of. So if the 15-minute trading into here does not respect this, then no bueno. But you'll often find that this movement can sometimes sweep through in the 1 minute and that close and respect it in here. So through your back testing, the 15-minute areas, they have the probability where major retracements and reversals come from. In this case, this is where the reversal is coming from. You might get a higher time frame move down into here. We can play it through if you guys want, just to kind of see how it plays out. But literally, like there's a few different ways that you're looking at how the price is going to react in the 15. Right, we'll look at some charts as well from like this week, right? Maybe right after this, and we'll kind of showcase a little bit of that, right? From the 1 minute, same sort of thing, right? We want to see a reaction. We want to see a reaction, and what a reaction means is that we've got our movement here. Now we've got inducement. This is your A plus trade, right? You've now got clear interest. We then run them out. We're expecting the narrative to be finalized here, and we're short. Right? Now, this didn't break order flow, so your concern is this low trading up and breaking this high, and that's fine. You would still expect this area to be respected. Right? Now, if you get a body closure like here, say at like, I don't know, the 70% in this case is 116, call it 25. I don't know why it's putting all those decimals. There's probably something I can adjust with that. Like, we don't want to see a body closure up here. If we close like right here at 71%, am I terribly concerned? No, we're using this pocket as the area where we're kind of going, I'm looking for a reaction and confluence with this area. So for example, we've got a pocket here, this zone, if we draw out a rectangle. Right? And we get rid of our pocket. And that's the area we're looking for. So as we trade up into it, we're looking at where's our liquidity. Right? That's not inherent to the Wombo combo. That's inherent to pretty much anything that you should be using to trade with in the first place. Where's the liquidity? We trade in. We didn't take this high. Right? So we might not even be interested in trading in this until that high is taken. And if that high aligns with the 70%, then we're probably going above the 70%. Whereas if, say, the pocket was here, now you might have a bit of a different decision. Right? You're still expecting this high to get taken. That's not relevant compared to the pocket itself. Right? But either way, you're looking at what price is doing leading into your area of interest and how price is reacting to it. And that will drastically increase your win rate with this system, which is already high to begin with, as you guys can see. But in the right hands, when you're looking at liquidity, when you're looking at structure, when you're looking at what price should do to go lower, to what price should do to go higher, right? Now you've got different things, like you're looking at trading through all these lows into the origin. If we get a movement out of here, we're trading higher. Higher to where? Okay, we failed here. Now we're going lower. Lower to where? We're taking both of these, right? And then how price is delivering on a lower time frame with that. Right? You'll notice that waiting for inducement here is quite a bit different than taking a trade out of this. Why? This price has already tipped its hand on the lower time frame. We can be very aggressive with it. This price tipped its hand. Oops. Price tipped its hand on the intermediate time frame, and now we want to see some sort of form of inducement and a change in order flow here, right? So this might have actually done that, and I would have been fine with taking that trade too. Does that answer your question? Right? So we're not necessarily looking at if the body closure happens at, say, 0.7. You might, while you're starting, look at any body closures above and you're flat. And you'll re-enter on some sort of lower time frame move or whatever. But you'll find that if you're involved, say, where's our pocket in here again? If you're involved here at 113, call it 113.50, and you got a 10-point stop, you got 4 points of drawdown here, whether it closes up here or not. So your 10-point stop, you're looking to trade to the 23.6. And if you take it off here because we failed to break through this low or whatever is going on, right? And then you can just re-enter, or you re-enter here, or whatever the case may be, right? The key is to not be offside on what the movement's doing, right? So even if this candle closed at 117 above the pocket itself, I wouldn't have said this trade is invalid. I would have actually expected the next candle to either sweep it and then die, or just to die immediately. That's overextended. But you'll see that very rare. Very rare. Like maybe 1 out of every 15 to 20 cases. All right, give the people what they want, apparently. Let's see. Let's see what we end up doing. Does it run to the 23.6? 180. Let's go. Nope. Mitigated. Right back in. And that was actually death. Just a casual second entry. Where? Yeah, I just lethargic movement, even with this lethargic movement for me. Let's see if we get target filled anyways. Now that we've got our major double bottom here. Would not expect it to trade underneath this, no. Even over Asia. Oh, do we get it or do we die? No, can't see it. Sorry, lads. Let's go 15th. Oh, where are we? Do we get it? Oh, look at that! Look at that! Who could have predicted this?